Hey everyone, welcome back to your Money Life Podcast, episode 295 of the pod. Make sure you're ever listening, you like, subscribe, 5-star rating, review. I'm actually at a new location in Minnesota visiting parents this week, so that's when the podcast is being recorded and disseminated there. You might hear a difference in the audio because we don't have all the equipment brought over here, but that's okay. Like, subscribe, 5-star rating, review wherever you're listening, and the same thing on YouTube as well. Let's jump into it. The first thing we like to go over is the market update. The market's update is going to tell us a little bit about what's going on. So I want to start with the actual information. The biggest piece of information that came out is the jobless claims. We saw that on a seasonally adjusted basis, there was 218,000 filings for unemployment for the week ended September 20th. This was the information given by the Labor Department. That's below consensus, and also about 14,000 less. And so that data came in surprisingly, to be honest, because we saw that the labor market was tightening. We thought that the labor market was getting worse, and that's what most of the data was pointing to prior to this number for this past week, which showed that less people filed for unemployment. So, is this real data, correct data? I guess we'll see. The Fed, Jerome Powell, has said that they're worried more about the labor market than stubborn inflation at this point. So that was telling me that their data is also pointing to the labor market tightening and being a lot more stringent for people. But that's the data that came out last week, so we'll take it. The past 5 days in the market, we've seen the chart. We're actually seeing the past 5 days, the market is about flat. Over the month, we're up almost 3%. 6 months really strong. Year to date, really strong. The market's had a strong time, and there could be a slight correction and pullback because we've been in a situation where the market has been strong here for a bit, right? And so those things are also possible. If you look at it, the market just opened as we're recording, whereas for the people that are listening to it, we're in the red, about 0.5% down on the S&P 500 ETF. So that's telling what the market is digesting this information on jobless claims, on the labor market, on inflation. That's driving the theme right now and what's going on in the market. Those are the themes still so far in earnings from companies. You got Oracle that will be doing some things. You have Transocean. So that's the biggest things right now that is driving the themes of the market. Let's dive into the jobless claims in more detail. So again, continuous claims, which run a week behind, with little change, falling 2,000 to 1.926 million. The release came just a week after the Federal Reserve voted to lower its benchmark borrowing rate by 0.25%. So that's the release of the newest data. Um, Initial claims for unemployment insurance were well below expectations last week, helping to douse caution at the Federal Reserve and elsewhere that the labor market is in danger. So again, the claims data can be volatile, with Texas showing big gyrations in recent weeks. The state recorded a decline of nearly 7,000 filings last week, according to an unadjusted figure. So these filings, unemployment insurance, the data is, it seems like a little lackluster, but they're taking the data, they're giving us what they got at pairs, and we have to dissect it, and investors dissect and disseminate what this means for the economy. Despite concerns of the rise of the economy could be slowing into the back part of the year, the economic data has remained fairly solid. And other reports Thursday confirmed underlying strength. So this is again confirming underlying strength. Is it solid or not? Because we're hearing conflicting answers, we're hearing conflicting reasoning, and that's the biggest thing that I think is confusing for investors is it solid or not? That's you hear talk to people on the ground floor, they'll say no. And so that's the biggest thing, being more on social media, on TikTok, you're talking to these people, they're saying a different story. But that's something we have to digest. But let's jump into news updates. Starbucks, they're actually showing they're going to close stores and cut jobs, which to me is surprising. Starbucks, there's one on every corner and it's always packed. They're going to close stores and cut hundreds of jobs as part of a 1 billion restructuring push as they look to regain the dominance of the coffee business. They said this Thursday and they'll lay off about 900 corporate employees, mainly in North America, plus eliminate many positions. This Starbucks' second round of layoffs since Brian Niccol became CEO. The company has not 6 straight quarters of falling same-store sales. Interesting. So he's come in, and I guess he's not doing as great as he was supposed to. We talked about this on the podcast. I think he came in from Chipotle or another big box restaurant, if I'm not mistaken. And I mean, what is he doing over there? Like, I mean, this is kind of surprising. So they're restructuring 1 billion. They're cutting jobs. They're cutting corporate. They're cutting stores. And he's trying to, I guess, restructure. We'll see if this play works. Because again, Starbucks is a strong company that's been doing well for a long time, and now hopefully they're not heading trending in another direction. Let's do some more positive news for those who celebrate Halloween. Halloween spending is supposed to reach 13.1 billion. Spooky season is upon us, and the spending is expected to exceed 13 billion this year, a 13% year-over-year increase. Talk about inflation. This is according to the NRF, National Retail Federation. The average shopper is projected to spend $114 on Halloween fun and roughly $11 leap from last year. So people are spending. What are you going to dress up as? I don't like Halloween. I like to be myself. All right. I like to be me. I can't do it. I can't do it. I like to be. I'm not fun enough, I guess. And we never celebrated as a kid. We just speaking personally, our family didn't. Got to keep it. We just kept it. We didn't really celebrate it. But though it's a big thing, I will actually, wife and I will have to, I guess, be doing trick or treating these little kids. We'll do that, I guess, I suppose. But what are you going to spend? How much are you spending? These numbers sound accurate. I guess they do. You get a little costume, get some candy. That makes sense to me. And people are going to spend. It's a fun holiday for a lot of people. So we'll see that happen. Big deal on this news. This is some big news, folks. TikTok deal is going to be signed Thursday. The president said he expects to sign up on Thursday a deal that will see TikTok become American owned. There's anonymous sources saying that the Chinese owner ByteDance will hold less than 20% of minority share of the new company stock. This is confirmed by a White House source. American investors involved Larry Ellison, the Murdoch family, and under new ownership, the U.S. users' data will be stored in the country and managed by Oracle. Man, Oracle signing off on a lot of stuff recently. And they're having a good time recently. So that's huge. If it does happen today, Thursday, if you're listening, we'll have to see what the details are because I'm really curious on that. As someone who's actually started to use the platform now, that's something I want to know. That's going to be really interesting. AI. Let's talk more about AI. The CFA, which is of course the Chartered Financial Analyst test, which is historically a really hard test. It comes in three parts. But 2 years ago, AI models can only pass the first two parts of this, CFA test. But the technology just aced the third in a mere minute. It took minutes for the new AI model, these new models, to pass the test in minutes. This is per a study cited by CNBC. Advanced reasoning models like Gemini 2.5 Pro and Claude Opus passed not only the multiple choice questions on the level 3 Chartered Financial Analyst exam, but essays too. So this is crazy. So essays were passed as well as the other part. So this is incredible from the AI models. They're only getting smarter. The models are only getting smarter. And as people have said, I don't know if they're worried about it or not, but these models are now being able to disseminate information so fast, better than many humans, and just pass these things with ease. So that's kind of incredible. Our last update for the day, I believe, Chicago Bears. They're valued at nearly 9 billion in a minority stake sale that sets an NFL record. The NFL's Finance Committee approved the sale of 2.35% of the Chicago Bears to existing owners of the team in a deal that sets a league record and values the Bears at 8.9 billion, according to three people familiar with the matter. The deal closed several days ago. The stake was held by the estate of Andrew McKenna, and according to two people familiar with the deal, McKenna died in 2023. The Bears are valued at 6.4 just a year ago. So these valuations for NFL teams are increasing heavily. This is an approved sale to existing owners of the team. So these people already owned it. They wanted to buy out of someone who the state was holding shares of someone who passed in 2023, and some existing owners scooped up the sale at 2.35%. It came in an evaluation of $9 billion, which is incredible. These valuations, again, for NFL teams, which again, the media rights, it's a growing game, sports betting, all these things when it comes to NFL is really increasing. And so you have to keep your eyes on that. We've talked about it plenty of times here before. Folks, I think it's time we jump into questions of the week. That makes sense to me. Hopefully, it makes sense to you. Let's do it. Let's do it. Let's see what we have. There's a couple good ones. I think the first one, I'm actually curious on this one. What percentage of new vehicle transactions involve leasing instead of buying? What percentage of new vehicle transactions instead involve leasing instead of buying? I'm gonna say 30 to 40%. 24%, that's almost one in four. That's pretty cool. Percentage of new vehicles are leased, 21. In 2023, it was 21%. 2024 is 26%, a lot higher. 2025 so far is 23.62%. And it makes sense with the rates so high, people are probably leasing versus buying because you just get You can find incredible deals versus, I think, buying. So, next question. I love this one too. What percentage of Americans wrote a check in the last year? I'm definitely one of those people. For some different things I had to do, I wrote a check. It's kind of cumbersome. I remember them teaching us to do it in like third grade or something. But yeah, I doubt there's that many people. I would say, well, older people love checks. I would say 50%. Wow, I'm close. I'm good this today. 54%. 54% of people wrote a check in the last year, and I was really spot on with that. Ladies and gentlemen, we do this every week, so make sure you tune in, you like, subscribe, 5-star rating review, pass this to your family and friends. Stay connected on social media, especially TikTok and Instagram, and we will talk to you next week.